Starbucks reported quarterly financial results after the stock market closed on Tuesday, January 28, 2025. The results showed a continued decline in customer visits and customer transactions as Starbucks struggles to turn around the business. I'm going to review the company's latest results in this video, and I'm going to update my recommendation for Starbucks stock. Coming into this earnings release, I had the stock rated as a hold, and I'm going to update that recommendation in this video and let you know if I still think it's a hold, buy, or a sell. Let's look into the results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, Starbucks said that in its first quarter of fiscal year 2025, global comparable store sales declined by 4%. That was driven by a 6% decline in transactions, offset by a 3% increase in average ticket. In other words, it looks like Starbucks is still increasing prices when compared to the same quarter last year. Prices are generally higher for the products that it's selling. It could also mean that people are buying more things when they're going to Starbucks. They're not going as often, so when they do go, they buy more things or they get more premium features added to their drink. If you're not already aware, you can add things to your drink that you can pay extra for. And so maybe people are doing that more often, and that's generating a higher average ticket. But the big problem, the big trouble for Starbucks is that people are going to Starbucks less often. And that's reflected in the 6% decline in comparable transactions. That means in the locations that were open for at least 1 year, the people in the current quarter visited Starbucks 6% fewer times, or there were 6% fewer transactions, which usually means that people visited in aggregate 6% fewer. And so that's disappointing for Starbucks that's been accustomed to growing comparable store sales in most of the areas it operates. This is a growth business, and for Starbucks to be decreasing is a sign of trouble indeed. And this is a result of execution difficulties. This is a result of the company struggling to fulfill consumer demand. I talked about in my previous video on Starbucks how when I'm opening my Starbucks app over the last 6 months, several occasions, I saw that the drink that I wanted was sold out and the drinks that my kids wanted were sold out. They don't have the things that you want all the time, which is strange to me how a company like Starbucks can have those kinds of execution issues where they don't have the ingredients for the drinks, especially the popular drinks that they expect people to order. So those are execution issues, and that's partly why they brought in the new CEO, Brian Niccol. They brought him over from Chipotle. They paid a king's ransom to get him over from Chipotle. And this was the first full quarter where he has been in charge. And there's reasonable confidence that he will be able to turn things around, given the success that he demonstrated at Chipotle. And before that, the success he demonstrated at Taco Bell. So let's give him the benefit of the doubt here. This was just one quarter. So in North America, there was an 8% decline in comparable transactions and a 4% increase in average ticket. International wasn't all that much better. There was a 2% decline in average ticket and transactions. So throughout its business, there was a decrease, right? And you can argue that some of it is due to competition, but I think most of it was just due to execution. Starbucks hasn't executed well in the last 3 to 4 years, I will say. Now, one of the things I've been calling for since they do have execution issues is to slow down the development of new locations, right? Slow it down and get your house in order before you focus on opening new locations, right? And the management team did talk about that a little bit, how they're not going to try to open as many new locations. But in the first quarter, they still opened 377 net new stores. And that puts them on pace for about 1,500 to 1,600 new locations over the next 12 months. And now they have 40,576 stores. Well, it's reasonable to assume that if you have execution difficulties, if you have more locations, it's going to be even harder to execute. It's going to be even harder to manage. Starbucks might be getting to the point, at least with the previous management team, where it's reaching diseconomies in scale. It's the opposite of what I talk about, what you want to see in a business, which is economies in scale, which means the bigger it gets, the lower its costs and the easier to manage, because you can do things like buy in bulk and exercise stronger negotiating power against suppliers, spread your fixed cost across a greater number of sales, etc. But there's also a thing called diseconomies in scale, where when a business grows too large, it becomes so difficult to manage that you start to see inefficiencies and mistakes like you're seeing with Starbucks. And so one of the reasons why they might be experiencing these mistakes is because they've grown so large that it's difficult to manage a business at this scale, selling these many things, these many items, these many ingredients across this many stores. It might be too much for them to handle. And so I've called for them to slow down the new store development until they can get their house in order. And then once they have things settled, okay, you can focus back on expanding your locations. So the operating margin decreased by a massive 3.9 percentage points. It's down to 11.9% now. This was driven by deleverage, right? If you have fewer customers coming in, your margins are going to fall. And investments, including increases in partner wages, benefits, and hours, and the removal of an extra charge for non-dairy milk customizations. So even though they're investing in the business, sales are still falling, and that's giving a uh, terrible 1-2 punch here. You have rising costs and declining comparable sales. So the CEO said that while we're only 1 quarter into our turnaround, we're moving quickly to act, and they're calling the strategy back to Starbucks. And they've seen a positive response so far. Okay, that's good to hear that so far so good. Still very early stages of this development. So Starbucks stock is now trading at a forward price to earnings of 29, which still seems too expensive to me given the situation Starbucks finds itself in. So after reviewing these quarterly results, I'm reiterating I'm keeping the stock rated as a hold, and I updated that recommendation today, January 29th, 2025.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.